questions? Yes. Oh, awesome. Oops. I'm not supposed to get rid of that. You can drink it. Yeah. Yeah, just put it on the floor. I eat back here, so. Okay. When you're here for like 12 hours at a time. Yeah. So you should go meet.
Check.
And this is the final copy.
Hey, Mr. Hey, Bruce.
I understand. This hearing will come to order. Today we have a hearing titled The High Cost of Small Business Health Insurance, Limited Options, Limited Coverage. Before we begin, I have unanimous consent request. Committee staff have prepared a memorandum that summarizes information gathered in our investigation into the small business health insurance market. I ask unanimous consent that the memorandum be entered into the record.
Mr. Chairman.
Mr. Gingrey.
Reserving the right to object, Mr. Chairman. I understand majority staff has been working with the insurers to protect confidential medical and business information, and of course this information was given to the committee in good faith with the understanding that it would not be made public before consulting with the companies that provided it. My question, Mr. Chairman, is the majority assuring us that there is no confidential or sensitive medical or business information in this staff memo, which we just got, I guess, the final version within the couple of hours, that will be revealed if we agree to this unanimous consent request? Let me ask that again. Is the majority assuring us that there is no confidential or sensitive medical or business information in the staff memo that will be revealed if we agree to this unanimous consent request? And if the majority cannot guarantee that the staff memo does not include confidential or sensitive information, would you amend your unanimous consent request to allow the majority and the minority staff to review the memo and make necessary redactions before it is included in the record?
Mr. Gingrey, all the names of the companies have been removed. There's, from our review, no proprietary information or business information that would be inappropriately disclosed. I'm very comfortable that there's nothing in there that would cause you any concern. We redacted most of it. This memo was actually done last night. We did have some names in there. We did hear some objection from minority side, so we did remove those names so no one would be
Mr. Chairman, I appreciate that. I know that some of these companies, and obviously I'm not mentioning their names, but they're, maybe in states where there's a very limited market, and I do have some concerns that it would be fairly easy to put two and two together and figure out, exactly who you're referring to.
Again, we reviewed it. We see nothing proprietary. We've run it by everyone need to be. I don't think there's any reason to have any concerns. However, if you want time to look at it, and by the end of the hearing, if you say there's a line that should be redacted, I'm happy to do so. Why don't we just go ahead and put it in the record? But if you have objections at the end of the hearing, when your staff has a chance to review it closer, I'll be happy to.
Mr. Chairman, I think that's very fair on your part. I appreciate that, and we'll take you up on that. And with that, I remove my reserving the right to object. We'll go ahead and let you put it in the record.
Well, thank you. The memorandum's in the record, and if by the end, close of this hearing, if there's an objection on a line or two, we'll have a chance to discuss it and remove that. Our purpose here is not to divulge or harm any company's business practice. We may question their business practice, but we're not here to harm their business practice through inappropriate releasing of information. So that the memos be made part of the hearing record. The chairman, the ranking member, and the chairman emeritus will be recognized for 5 minutes for an opening statement. Other members of the subcommittee will be recognized for 3-minute opening statements. I will begin. Today's hearing is the fourth in a series of subcommittee hearings on business practice in the private insurance market. Earlier this year, we held hearings on the insurance industry practice of terminating coverage after a policyholder becomes sick and files a claim. In our investigation, we learned that if your insurance company believes your illness may be costly, it will go back and re-examine your initial application to find any excuse to cancel your coverage. As health insurance industry executives brazenly told us, this practice, known as rescission, will continue until there's a national health care reform to expressly prohibit it. Last week, we held a hearing on the problem of underinsured, which occurs when someone has health insurance but their coverage is inadequate, leaving them with a limited coverage when they need it the most. We heard compelling stories from Americans who purchased insurance, paid their premiums, and expected to be protected in the event of a health crisis. When that crisis struck, they realized that their insurance was woefully inadequate to cover the high costs incurred to treat themselves or their family members. Today we continue our investigation of the private health insurance market with a focus on the challenges faced by small businesses. Small businesses are a cornerstone of the American economy. They are the American dream. They employ 59 million American workers and created a quarter of the nation's jobs from 1992 through 2005. In August 2009, the committee sent document requests to 6 leading health insurance companies that sell policies in the small business market, seeking information about how they set premium rates and about some of the largest premium rate increases in recent history. What we learned from that investigation was the insurance companies take advantage of lax state laws and regulations in order to purge unprofitable small business policies. Because federal law guarantees small businesses cannot be denied insurance once they purchase it, insurers impose unpredictable and increasingly unaffordable premium increases. These unsustainable increases forces a small business to drop their health insurance because it's no longer affordable. Thus, the small business is purged. These increases are based on factors that are beyond the control of small businesses, such as employee health status, the size of the small business, and the age and gender of the employees. As a result of these discriminatory pricing practices, small group premiums are subject to unpredictable and enormous increases. Insurance companies routinely impose double-digit increases in premiums, and in some cases, premiums increase more than 200%. Some of the more shocking cases that the committee uncovered include: in January 2008, an insurance company offered a 232% premium rate increase to an engineering service company in Kentucky. The number of employees on the plan had dropped from 8 to 1. In 2009, another insurance company offered a small technology firm in Georgia renewal of its current HMO insurance policy at a 214% increase in premiums. The basis of the rate hike was that the average worker at that firm became older and/or more likely to be female, and the size of the company decreased. Large annual premium increases can be devastating for small firms. As small firms struggle to stay afloat during this economic downturn, health insurance costs consume an even greater portion of company profits and make it even harder for these companies to cover all persons. Even before this most recent economic turndown, the cost of employer-sponsored health insurance was the primary concern of small businesses. The average cost of a family premium for a small business health insurance plan is nearly $13,000. This is up 123% since 1999, while the median family income grew only 29% over the same period. Because of these higher costs, nearly a quarter of all small businesses are making a difficult decision to reduce their health benefits. Small business employees are shouldering a higher burden of their costs. Over the last 10 years, worker contributions for health insurance premiums have more than doubled, while their deductibles have greatly increased. Some businesses have even had to take the drastic step of eliminating employer-sponsored coverage altogether. Less than 50% of the smallest firms, those with fewer than 10 employees, offer coverage. As a result of reductions in small group coverage, more than half of all small business employees in 2007 were either uninsured or underinsured during the year. It is clear that the high cost of health insurance is crippling small businesses in our country, just when we need our nation's small businesses to contribute to job growth and economic recovery. We must reform our health care system so it does not punish those small business owners who choose to do the right thing and provide coverage for their workers. Today we'll hear testimony from several small business owners about the challenges they face in today's small group health insurance market. Mr. Mick Landauer is the owner of Bi-State Muffler and Brake Incorporated for the past 30 years. He has shops in Iowa and Illinois, employing 11 workers. This year, he was quoted a premium increase of 42% from his current insurer. Mr. Landauer believes that this increase is due to his own congenital heart condition, which has required 3 heart surgeries in the past and probably more in the future. This year, instead of accepting this outrageous increase, he opted to increase his employee's deductible to $8,000 per individual and $16,000 per family. Next year, he plans to take himself off the company's plan in order to reduce the insurance rates for his business. More importantly, he believes that it's the right thing to do for his employees. Mr. Bruce Hetrick owns Hetrick Communications in Indianapolis, Indiana, with 15 employees. His company received double-digit rate increases from his carrier this year. His insurance plan also covered his late wife, who developed cancer and incurred over $300,000 in treatment costs in her last year of life. In that year, Mr. Hetrick's health premiums rose 28%. After his wife passed away, his insurance company requoted the policy. The premium increase was rolled back to 10%. Mr. Fred Walker owns St. Petersburg Glass and Mirror in St. Petersburg, Florida. He has offered health insurance since he started his company 15 years ago. His carrier has increased his premium rates every year, including 14.6% increase this year. To keep his business afloat during this downturn, he was considering dropping health coverage altogether until he found out his secretary had breast cancer. He decided to do the right thing and maintain his company's coverage so that his secretary could have coverage for her treatment. But to afford coverage, he had to take a plan with a $6,000 deductible. Because the group coverage was renewed, his secretary has been able to obtain the treatment she needs for her cancer. We'll also hear from Dr. Linda Blumberg, an expert on health insurance in the small group market and the effect of health insurance costs on small businesses. The U.S. House of Representatives will soon vote on H.R. 3200, America's Affordable Health Care Choices Act of 2009. H.R. 3200 contains critical insurance reforms that will end abusive insurance company practices. Under the bill, insurance companies can no longer rescind policies after people get sick based on minor mistakes or technicality. The bill prohibits the type of annual and lifetime caps on coverage that lead many individuals to be uninsured or underinsured. And insurers will no longer be able to discriminate against small businesses based on how small they are or the health status of their workers. We must reform health insurance so that small businesses can compete on a level playing field with large employers and lead the way for our nation's economic recovery. That concludes my opening statement. I'll next turn to Mr. Gingrey for opening statement, please.
Chairman Stupak, thank you, and thank you for holding the hearing. Our economy owes most of its success to the people who will testify before the committee today, Americans who work in a small business. Their prominent place in the American economy makes this hearing today an even more important one. Small businesses create jobs and wealth. Surveys have shown that companies with as few as 20 employees are often responsible for a quarter of the country's job growth. And in recent years, the vast majority of United States firms had fewer than 50 employees. First and foremost, Congress must enact policies that help these businesses grow and promote job creation. As we continue to review potential reforms for the healthcare system, we must also find a way to enact new policies and regulations that will help our small business owners provide their employees with quality, affordable health care. Since 1999, the average annual cost of a family premium for employer-sponsored health coverage in a small firm has increased over 120%. That's about 12% a year over the 10-year period. The three small business owners today will testify to a system that offers small businesses few options and increasing costs. They will all testify to the basic problem facing small business owners. With fewer employees, one illness can make health care unaffordable for all, for the entire employee group. Bruce Hetrick will testify that his wife's cancer resulted in $300,000 in health care costs. When it came time to renew his policy, the premium was scheduled to increase nearly 30%. His wife passed away a month before the new premium took effect. When the insurance company learned of this, they changed the premium increase to just 10%, a particularly cold comfort, I'm sure. Mr. Hetrick, I wish to convey my condolences for your loss and thank you for your courage in testifying today. Fred Walker's business was hit hard by the economic turmoil of the past 2 years, so much so that in February of this year, he had decided to discontinue the company's health care plan. Only then he learned that an employee had been diagnosed with breast cancer. For Mr. Walker, the choice was easy. He decided to continue the employee health care plan, but he was facing a 14% increase in the premiums last year. Today he worries that the next premium increase will be much more substantial and very possibly unsustainable. Mr. Walker, I thank you also for taking care of your employee and for being here and appearing before the committee. Michael Landauer has been operating the bi-state muffler and brake. For 30 years, he's been able to offer his employees health care, but today those costs are spiraling out of control. Over the last 2 years alone, his deductibles have quadrupled. Mr. Landauer plans to remove himself from his own plan next year because his own health care costs are what essentially is driving up the premiums for the rest of his employees. Mr. Landauer, thank you again for being here and for testifying. I note the title of this hearing is The High Cost of Small Business Health Insurance, Limited Options, Limited Coverage. It's a sad truth. Small business owners have few options when it comes to purchasing health insurance. Congress has an opportunity to enact reforms that address these skyrocketing costs. However, I recognize that there are ideological differences among this body regarding how we provide small business owners with more affordable health care options. To be frank, we do them and millions just like them a disservice by insisting that the path to reform is singular, one size fits all. This Congress should consider high-risk pools that can be designed to offer those with chronic illnesses affordable coverage without requiring their coworkers or employees to pay more for their own coverage. We should also give small business owners the ability to choose the coverage they want, free of mandates for care that require them to purchase services that they don't need or want. These are but two examples of many ideas that Republicans want to share with our President and Democratic colleagues if they would only take the necessary time to listen. I thank the witnesses again for appearing before the committee today. I look forward to your testimonies and the dialogue to follow. Thank you, Chairman Stupak, and I yield the balance of my time.
Thank you, Mr. Gingrey. Mr. Waxman, Chairman of the full committee, opening statement, please, sir.
Thank you very much, Mr. Chairman. Today we're going to hear about the difficulties small businesses face in finding and keeping affordable health coverage for their employees. Last summer, Chairman Stupak and I initiated an investigation into insurance company practices in the small group market. The committee obtained thousands of pages of insurance documents, interviewed company executives, and heard stories from numerous small business owners. What did we learn? Simply put, the health care market for small business health insurance is fundamentally flawed. Rising health insurance costs are wreaking havoc on small businesses and their employees. As one of today's hearing witnesses put it, health care and health coverage inflation is small business enemy number one. Many small business owners, like the ones we'll hear from today, want to provide health coverage for their employees. It's not only the right thing to do, but it also makes good business sense because it helps them recruit and retain better employees. But the current system stacks the deck against small businesses. Small firms pay premiums that are 18% higher than what large companies pay for the same level of coverage. And insurance companies can legally discriminate against small firms when setting premium rates. If a small firm employee gets sick, the insurance company can hike up the premium rates in order to recover its costs. Insurers can also charge discriminatory rates based on the age and gender of the small firm's employees. They can charge higher premiums to small businesses that employ older people or young women who might get pregnant. And these discriminatory rate-setting practices are perfectly legal under our current health insurance system. Moreover, the insurance companies punish small businesses for being small. Insurers charge the highest premium to the smallest firms who, unlike large businesses, cannot spread risk among many employees. Our investigation revealed that annual premium increases can be staggering. Insurers take advantage of weak state regulation of premium rates in order to purge from their rolls the less profitable small group policies, and they do this by making their insurance plans too expensive for a small business to afford. Small businesses commonly face double-digit increases in their health insurance premiums, and insurers impose even steeper rate hikes on the small businesses that happen to have a sick employee, employ more women than men, or have an older than average workforce. The committee's investigation revealed that several insurers have imposed premium increases of greater than 100% on small business customers. 2 insurers have imposed rate hikes of greater than 200% in a single year. Given the sky-high costs of small group coverage, it's not surprising that small businesses are less likely than large to offer coverage, and as premiums skyrocket in this market, the share of small businesses that offer group plans continues to decline. The committee has investigated a variety of private insurance practices, and one common theme has emerged. Insurance companies compete not on the basis of who has the best record of keeping their customers healthy, but based on who is best at avoiding covering people who need life-saving and expensive health care. When we examine the individual health insurance market, we learn that companies will cancel policies after a policyholder gets sick and file claims. In the small group market, insurers don't cancel the policies. Instead, they increase rates to unaffordable levels so they can unload small businesses with sick employees from their plans. In each case, the insurance companies have created a win-win scenario for themselves. If health claims are low, the company collects premiums and makes money. If policyholders get sick, the company finds a way to get rid of the unprofitable policy. But that's not how insurance is supposed to work. The purpose of insurance is to spread risk across large numbers of people so that when some people get sick, they receive needed care without experiencing financial ruin. In today's private health insurance market, too often insurance companies simply aren't there when they're needed the most. It's time to fix this broken system and ensure that everyone has access to affordable, reliable insurance. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Ms. Blackburn, 3 minutes for an opening statement, please.
Thank you, Mr. Chairman. Welcome to our witnesses. We are glad that you are here. We appreciate your submitting your testimony in advance so that we could prepare for the hearing today, and we welcome each of you. We will be interested to hear your comments and to get your thoughts on the issue that is before us. Last week we had a hearing that's been mentioned. It was on the rescissions issue, and as I said then, and will restate today, I favor patient-centered, free market-oriented health care solutions that will keep people covered and employed, which is what we want to do, and we know that you all want to be able to keep people employed. And I think it's especially important for you because we know that small business firms that employ 500 or fewer individuals, that comprises half of the American people that work in the private sector. And that should not be lost on us as we look at how we approach health care reform. Small businesses have created more than 72% of the new jobs created across this country in recent years, and because of that we have a true appreciation for what you do. I do have concerns with the plans that the Democrats have brought forward on health reform. I was looking at some research today. Basically, their reform plan includes a $544 billion surtax on what is termed the rich. But we all know that is primarily those of you who are small business owners and are going to bear the brunt of some of the reform efforts that have been mentioned and brought forward. According to data from the IRS, more than half of those targeted under the Democrats' health care surtax are the small business owners. Now, this is of concern to me because I come from Tennessee, where we have had the test case for public option health care. It was put in place in late '94. It's a program called TennCare. Our small business owners, while I was in the state senate there, worked with us repeatedly because of their concern for the way that program was structured. And what we saw happen with the advent of public option health care in our state was that the cost of insurance went through the roof for our employers. It escalated more than the national average, and you've heard my colleagues talk about the rate of increase in some of their states. We're also concerned as we look at increased taxes and the mandates and bureaucracy, and we've read some of the estimates that health reform policies that have been proposed from this body would cost as many as 5.5 million American jobs. We don't want to see health care become such an expense that you can't afford to keep your doors open. I am on your side in making certain that this stays affordable. We're looking at other options. I thank you for being here. I yield back my time.
I thank the gentlelady for her opening statement, but I must correct you. 3,200 does not impose a super tax on small businesses. It's on individuals who have incomes more than $1 million. It's not on small businesses. I'm sure it was just a misstatement or something. I just clarified a record.
Mr. Chairman, I would love to submit the memo I have in my hand, if that would be acceptable.
Well, I have no problem with you submitting a memo in hand, but you got to have your facts straight. I mean, 1% of income between those who make $350,000 to $500,000, and 1.5% between those who make $500,000 to $1 million. The issue is there is no extra tax on small businesses. That's what your statement said, 500 and some billion. That just is not true. It's only 1.2% of all taxpayers, individual taxpayers, not businesses, that would have to pay the surtax.
Mr. Chairman, most small businesses file as a sub-S or file on a regular 1040, and I think 22 members of your caucus also have written the Speaker with concerns about this very issue for those small businesses. I join many of our small business owners. They're not claiming party affiliation, they are claiming concern. Many in our state have seen it because of the impact of TennCare. I raise it not as an item of controversy, but as an item of concern that I have for our nation's small businesses. And I think that as we move forward, you've always been good to work with us on issues, and I would look forward to working with you to make certain that we address this so that it does not affect our nation's small business owners. And I appreciate the hearing today.
Well, again, let me just state, even if you want to call it subchapter S, the tax is not on business. It's on individuals, and those with the highest 1.2% of all taxpayers who have to pay it. It's not on businesses. I guess we can argue that all day, but it's not on businesses. I want to make that clear. It's on individuals, okay? And that's from the Joint Tax Committee. The surcharge would have no
They're
impact.
business owners, sir. Thank you.
Oh, yeah, I'm not arguing where you're getting your income from. What I'm saying is it's on individual income, not on businesses. Mr. Burley for an opening statement, 3 minutes.
Thank you, Mr. Chairman, and thanks to all of our witnesses for joining us today. The problems that we're here to talk about are all too familiar to me as a small business owner for 20 years before I came to Congress. For the last decade that I can recall, the place where I worked, where I was a small business owner, faced a minimum of 15% premium increase notices every year and a maximum of 47%. When you're a small business faced with that challenge, you have limited options, and one of the options that we pursued almost every year was filling out multiple insurance applications at 4, 5, 6, 7 different companies in search of a better option for the employees that we cared about. And yet almost every year we were faced with the harsh reality that in my state of Iowa, 80% of the health insurance market is dominated by 2 companies. And so there were very, very few cost-effective options available to small business owners. And I'm also very familiar with the impact that one severe illness among your employees or a covered member of their family can have on dramatically increasing the cost of a small business's insurance costs. We had employees who were diagnosed with multiple sclerosis, and we saw our premiums skyrocket because of the enormous cost of caring for that lifelong disease. We had employees diagnosed with cancer who suffered substantial health care costs that also impacted our next year's premium costs. These are not things that are abstract to small business owners. These are the challenges they face every day, and they want to try to provide the best possible coverage for their employees. But when we see what's happening right now with health care costs projected to go up 10.5% again next year, according to the health insurance industry itself, we know that that's not just going to be a dollar-for-dollar pass-through to small businesses, because if you look at the trends, it's usually about a 2-fold or 3-fold increase in premium costs. And that's why, to quote our friends on the other side, free market-oriented healthcare solutions aren't working for small businesses. We've had high-risk pools that have been available in many states. It has not solved the problem that small business owners face. And that is why it's time to look at new creative solutions like a public health insurance option to inject more competition into a free market system that does not have competition in many states, and to give small business owners true choices in the type of coverage they're looking at to provide to their employees. And there was a reference to this surcharge. Well, the IRS has done analysis of every congressional district in the country in terms of who would be impacted by the surcharge that's in the House health care bill. And in the 1st District of Iowa, 99.33% of my constituents would not be impacted at all by that surcharge. So I want to thank everyone for being here today. I'm proud to have a witness from my district, Mick Landauer, and I look forward to his testimony.
Thank you, Mr. Braley. Ms. Christensen for opening statement, please.
Thank you. Thank you, Mr. Chairman Stupak, and for holding this hearing. Small businesses have a major stake in what we're trying to do in healthcare reform. As a physician, also a former small business owner, of course, and a former 10-year member of the House Committee on Small Business, the gravity of this issue and its implications have long been of concern. Our nation's present and future economic health thrives and flourishes based on the viability of our small businesses. They employ more than half of our country's private sector workforce and are currently responsible for 3 out of 4 new jobs. Yet, due to increasing premium rates and their already very high insurance costs, more and more of these businesses find it difficult, if not impossible, to offer their employees health insurance, and this is even more acute given the current economic crisis. Looking to the future, the Council of Economic Advisors predicts that if nothing is done to address insurance plan practices or to slow the rise in employer health premium rates now, fewer than 20% of small employers will offer coverage by 2040. The success of small businesses depend on a healthy workforce, and we all know that when one does not have insurance, needed health care is often deferred. Without healthy workers, small businesses cannot thrive, so passing a robust health bill is vital to the survival of this engine of our economy. Done right, it will level the playing field, giving small businesses the opportunity to offer affordable quality coverage to their employees at a fair price. I'd like to also thank the witnesses for being here this afternoon to help highlight this need and the opportunity we have before us to make a difference in the strength of this important sector of our economy. Thank you. I yield back.
Thank you. Mr. Dingell for an opening statement.
This very important hearing on an issue which is central to our comprehensive health care reform efforts. The United States spends over $1.9 trillion annually on health care expenses, more than any other industrialized nation. These costs keep rising and are a major factor in the difficulties facing American businesses in remaining competitive and profitable. This is strikingly apparent for America's small businesses. There's no doubt that today's private insurance market is not working well for anybody, but especially so for small businesses and for their workers. They are severely disadvantaged by current U.S. healthcare systems operations relative to their larger counterparts. Small business owners and their employees are receiving fewer benefits and paying higher costs for health coverage. During the past decade, the median family income grew 29%, while the average annual cost of a family premium on a small firm increased 123%. The U.S. healthcare system imposes also a heavy tax on small businesses and their employers, not often noted, except by the small business people. Small businesses pay up to 18% more per workers than large firms for the same health insurance policy. Some of these higher costs are passed on to small firm employees in the form of lower wages or in form of lesser benefits. And some eat into the profits of small businesses that could otherwise be used for much needed investments. I've heard from many small business owners in my district about their genuine desire to provide health care for their workers. Unfortunately, because of the costs, they are simply unable to do so. This impacts recruitment, retention, and places them at a very real and severe competitive disadvantage. I want to express my particular thanks to our witnesses who have joined us today. I'm happy to tell them that their testimony reminds us why it is so crucial that we pass comprehensive health care reform this year. And again, I want to commend you, Mr. Chairman, for having this hearing. We understand that small businesses are critical to job growth and innovation in the U.S. economy. They are the key to our economic recovery. In drafting comprehensive health reform legislation in the House, we have taken aggressive steps to ease the burden currently experienced by small business owners who struggle to provide health care for the employees. Under H.R. 3200, small businesses will be able to provide and to purchase health insurance through a national insurance exchange, allowing them to choose between a multitude of plans that would provide better coverage at lower costs than they could find in the current group market. Those plans would also be transparent, and those plans would also meet rigorous standards for the protection of the employer and the employee. Small business employees will no longer be penalized for pre-existing medical conditions, a poorer health status, or age. Some small businesses that provide health insurance for their employees will receive up to a 50% small business tax credit to alleviate their disproportionately higher costs and encourage better coverage. Additionally, small business owners will benefit as costs for the uninsured are no longer shifted onto employers. Mr. Chairman, I commend you again for your diligence in this matter. Today's hearings and the investigations that you have been conducting highlight the importance of our cause to deliver comprehensive health reform for the American people. Thank you, Mr. Chairman. I yield back the balance of my time.
Thank you, Mr. Dingell. After the bells, we'll hear from Ms. Sutton from Ohio. Why don't you give a minute here? There we go.
Thank you very much, Mr. Chairman, and thank you for holding this important hearing. And to the witnesses, I look forward to hearing what you have to say. Thank you for coming forward and sharing your experiences and your stories to inform our discussion and our policy making. You know, small businesses are the drivers of our economy. And from 1992 to 2005, companies with fewer than 20 employees accounted for a quarter of the nation's job growth, and Ohio is also experiencing that kind of job growth in small businesses. From 2004 to 2005, small businesses created the only surplus in new jobs for Ohio. In those years, while larger employers saw decreases in employment, the smallest Ohio employers, those with 1 to 9 employees, saw large increases. Small businesses in Ohio have the ability to thrive, but health care costs pose a major impediment to their potential continued success. In 2008, Ohio small businesses spent $5.3 billion in health care premiums, and a small business majority report found that the number could rise to $12.5 billion by 2018 without health care reform. These high costs lead employers to cut benefits or, in many cases, not offer them at all. In 2008, just 31% of Ohio's small businesses reported paying for health insurance for their employees. And of the ones that did, 71% said that they were struggling to do so. And of the ones who don't provide insurance, more than 75% of those said they could not afford it. Small businesses are not unlike individuals when they're trying to buy health insurance for their employees. They don't have the bargaining power and are charged higher prices for plans that are less generous. Basically, insurance companies discriminate against them, giving them take-it-or-leave-it plans. The rates and services offered can vary greatly, even for companies that are the same size and may be involved in the same business. Over the past year, this subcommittee has been active in exposing and revealing underhanded insurance practices by insurance companies. We're gathering information on the cancellation of small business plans, as well as the overall business practices of insurance companies. In a hearing last week, my colleague, Representative Schakowsky, referenced a news story in which an insurance company canceled an entire line of insurance for small businesses in order to remove costly beneficiaries from their rolls. It's unconscionable behavior. Pursuing profit without regard to the wake of harm, the people that they leave behind stranded not only with health problems, but with no way to access the care they need to overcome them. We must get to the bottom of these harmful practices, and this hearing is a good step in that direction. As I said, small businesses are part of a growing list of people and institutions, entities that need health care reform now in order to succeed. And I yield back.
Thank you, Ms. Sutton. Mr. Green, for an opening statement, please.
Thank you, Mr. Chairman. I'd like to place my full statement in the record.
Without objection.
Thank you for holding this hearing, because small businesses, particularly in a tough economy, face such a hard decision, because in my earlier life, I actually helped manage a small business with 13 employees and had to negotiate with insurance companies. We had a bargaining unit, so our line employees or our production employees would be covered, but we wanted something to cover all 13. And I can tell you a lot of experiences, and I'll tell you one, because we would sign a three-year contract, and in this first year they would always raise the premium so much because they knew we were producing a product and not actually in the business of buying insurance. And it went to where we had to go every year almost and threaten to take our work policy elsewhere. But one year they came to me and said, because it was my job to negotiate with the insurance company, they came to me and said, you have one employee who's had 2 radical mastectomies. And if you exclude that employee, we can give you a lot better rate. And I said, you don't understand. That employee is the wife of the owner, and it's a family company. And I'll tell them you suggested that. But and they actually pulled it off the table. But, you know, that's what employers, small businesses see every day, the choice of either cutting employees or cutting your health care. And that's why what Congress is trying to do is so important, to put small business on the level playing field so they can bargain with insurance companies on some type of even field. And so, Mr. Chairman, thank you for calling this hearing, and hopefully it'll point up the need that we need for, or the need that we have for some kind of national health care exchange that small business can participate. I know in Texas we've tried to do that with very limited success. But again, thank you, Mr. Chairman, and look forward to the testimony.
Thank you, Mr. Green. Ms. Schakowsky, for an opening statement, please.
Thank you very much, Mr. Chairman, for holding this this hearing that focuses on the problems of small business owners and their employees. Virtually every business and every household in our country is struggling to cope with rising health care costs. It's really code red for small businesses. The Main Street Alliance describes it this way, quote, every day small businesses are being forced to drop health coverage, lay off employees, or shut their doors for good because of the rising costs of health care. Small businesses can't afford the cost of doing nothing on health care. We can't afford to see insurance costs continue to skyrocket with no bargaining power to keep the insurance companies in check. We can't afford to pay more for less coverage, including twice as much in administrative costs as larger groups with no real alternatives. We can't afford to keep absorbing huge rate hikes in this system that gives insurers free rein to discriminate based on our employers' based on our employees' health status and gender. You heard about health status. I hope to ask some questions about gender. This is a critical condition confronting many of my constituents, people like Marie, who owns a candy store in Wilmette. After she and her husband were denied coverage, they were finally able to find a policy, but one that requires them to pay $1,700 each month in premium and out-of-pocket costs. And how many small business entrepreneurs can afford that, particularly in today's economy? Or Jim Kelly of Glenview, Illinois, who works for a small business that can't afford to provide coverage to its workers. Jim and his wife are forced to take, in his words, a risk. We're paying cash for our medication and hoping that nothing major happens until we're eligible for Medicare. Americans shouldn't be asked to gamble with their lives. It's time for solutions, and I hope that we'll hear today the changes that are essential to keep small business economically strong and small business employees healthy. And I think this hearing and action on health care reform couldn't be more timely. Thank you, Mr. Chairman.
Thank you, Ms. Schakowsky. That concludes the opening statement by members of the subcommittee. We have our first panel of witnesses before us. Our first witness, Mr. Landauer, comes from Iowa and is a constituent of Mr. Braley, and Mr. Braley is the vice chair of this subcommittee, so I'm going to ask him to take a moment to introduce Mr. Landauer.
Thank you, Mr. Chairman. I'm proud to introduce Mick Landauer, a constituent of mine and the owner of Bi-State Muffler and Brake, Inc. in Davenport, Iowa. Mick showed up at one of my very first town hall meetings on health care in July in the Quad Cities and has been working with my office all year on important health care issues, particularly the challenges of providing affordable health care coverage for his employees. And I want to thank Mick for helping me on this critical issue and for being here to share his story with the subcommittee.
Thank you. And Mr. Bruce Hetrick is with us, who owns a small business owner from Indianapolis, Indiana. And thanks for being here. I know it's difficult, and sorry about the loss of your wife, but it's a story I think we all need to know because I think small businesses face it every day. So thank you for being here. Mr. Fred Walker is a small business owner from St. Petersburg, Florida. I know the economy is not the best down there, so I'm sure you can give us some insight, not just on health care, but also on economic and what's doing to your business line on health insurance. And Dr. Linda Blumberg, who's a senior fellow at the Urban Institute, expert on small business and insurance, and we look forward to your testimony. It's the policy of the subcommittee to take all testimony under oath. Please be advised that you have the right under the rules of the House to be advised by counsel during your testimony. Do you wish to be represented by counsel? Everyone's shaking their head no, so I'll take that as a no answer. Therefore, I'm going to ask you, please rise, raise your right hand, and take the oath. Do you swear or affirm the testimony you're about to give to be the truth, the whole truth, nothing but truth, matter pending before this committee? Let the record reflect that all witnesses answered in the affirmative. They are now under oath. We will hear from you with an opening statement, 5 minutes long. If you have a longer statement, we will include it, and it will be made part of the record. Mr. Landauer, if you don't mind, we'll start with you. We'll go from my left and go right across. You might want to turn that on, Mr. Landauer, as a green light should go on, or there we go. Go ahead.
Thank you, Mr. Chairman, and to all honorable members of the Congressional Subcommittee. I'm here today to give just one story on the high cost of small business health insurance. I do own my own business. I have owned the company for over 30 years, and one of the perks we offer at the company is a group health insurance policy for the employees who desire coverage. The cost is split on a 50-50 basis, and these costs keep rising. In 2006, our company paid $17,500 for health insurance. That was about 2% of the business costs. In 2007, the health insurance costs rose to $22,000. That was 2.4% of our costs. In 2008, health insurance rose to $25,500. And again, our costs of it rose also. In 2009, health insurance through September has cost $21,660, which comes out to about $29,000 for the year, and it is up to 3% of our expenses. The rates per employee have been climbing tremendously. In order to keep them down, our deductible is rising instead. Our monthly premiums now are around $400 for a single individual and around $850 on the family plan. The deductible is at $8,000 for an individual policy and $16,000 for the family plan. The Muffler shop pays for half the deductibles in 2009. Last year, we had deductibles of $4,000 for an individual and $8,000 for a family plan with monthly rates that were quite a bit lower. 2 years ago, the deductibles were at $2,000 for an individual and $4,000 for the monthly plan. the monthly rates again were lower yet. At our next signing period, I expect the deductibles to double once again, with the monthly rates to go up by $50 to $100. How can this be? It is because one of our policyholders was born with congenital heart disease. He visits a specialist twice a year. A routine visit costs anywhere from $1,200 to $1,500. Any specialized test that may be done can run $10,000 or more, and that employee is me. The only way I see to keep both monthly rates and deductibles reasonable is by taking myself off our group policy. I will not be able to get health insurance, individual or otherwise, as I've turned down our company's group plan that is available to me. So I ask you, what options do I have? Pay for my own medical costs, in which case I would be forced to sell the business? Quit going to doctors, including my congenital heart specialist, even though I now have a pacemaker? Or how about moving to Canada, which has a national health care plan, but yet again I would be forced to sell my own business? To me, owning your own business is the American dream, a dream that now seems to be only that, a dream. I turned 53 last Thursday and am beginning to wonder how it could all go wrong. Is it punishment for not being the typical person? I employ 11 people at the Muffler shop, including myself, and do feel successful in the business world. I'm a member of our local temple. I'm a member of 2 nonprofit organizations. But I've learned anything can change in an instant. Anyway, I would like to personally thank you for letting me have my time at the hearing. I know that our health insurance landscape does need a change. I know that is an issue with all Americans, as it does affect each and every one of us. I do understand there is many reasons for a change in our health insurance system as there are against that change. And I see there is no right or wrong answer to the question of health insurance. As for me, I am for a change in the way health insurance policies can be written. Whether we make them national in scope or even let the government offer their own policy, I feel it is time for a change. Health insurance is not just a purchased item as is car insurance, but rather a part of America that does affect all Americans. I know you have a difficult task ahead of you, and I wish you all the best in trying to solve America's health care dilemma. I wish you the best of luck in the decisions you are going to make that will not only impact me, but the rest of America as well. Each and every one of us are going to be affected by your decisions. Once again, thank you for letting me testify before you today. It has been my utmost honor to have the privilege of speaking before you and trying to give a voice for many other people besides myself.
Thank you, Mr. Landauer. Mr. Hetrick, your opening statement, please.
Mr. Chairman and members of the committee, thank you for the opportunity to talk with you about the impact of health insurance on small business. My take on our health system comes from 3 perspectives. First, you need to know that I am a hearing-impaired, migraine-suffering, diabetic cancer survivor who is also the father of a cancer survivor and the widower of a cancer victim. So I have experienced more than my fair share of the American healthcare system. Second, as a professional communicator with a passion for human services, I have spent decades working for health educators, nurses, doctors, hospitals, health advocates, and the people who pay for all of the above. Third, I have been a small business owner for 16 years. In that role, my colleagues and I have evaluated, purchased, and paid for health insurance for our employees and our families. Despite my and my family's health problems, I consider myself lucky. I've had health coverage for myself, my spouse, and my twin sons throughout my 30-year career. For the most part, the policies have covered what they promised to cover, little haggling required. When the need was greatest, during my late wife's cancer battle, our insurance company, Anthem Blue Cross Blue Shield, sped approvals and denied not a single claim. I'm very grateful for that. And on the other hand, I have some frustrations. First, health care and health coverage inflation is small business enemy number one. My company pays 80% of employee premiums and 50% of dependent premiums. That's higher than typical for firms like ours, but it helps us to attract and retain good people. It also leaves us with painful choice. Either the cost of health coverage cuts into our profits, or if we pass it on to our customers, it renders us less competitive. Another concern is health insurance rate inequities. If you are a big business, you get pricing based on giant risk pools. But if you're a small company like mine, one staff health crisis can send your rates skyrocketing. Let me give you one example. My late wife, Pamela Klein, was also my business partner. As such, she was covered by our company's health plan. In the last year of her life, the billed charges for Pam's cancer care totaled $300,000. A few months before her death, our health insurance renewal came up. Lo and behold, the quoted increase for the health insurance portion of our benefits plan was a whopping 28%. That would have been devastating to our company and our employees. When Pam died just short of the actual renewal date, I had our rates requoted. With Pam out of the mix, the increase for the very same health coverage was just 10%. A 28% increase reduced to 10% because of one person who needed the care that we had paid for. One additional concern I'll share with the committee involves taxes and economic development. Because I own more than 2% of an S corporation, my benefits are fully taxed income. My employees' health insurance is a pre-tax company expense. Mine is fully taxed as personal income. In addition, my employees enjoy pre-tax spending accounts for their out-of-pocket medical expenses. I'm the only person in the company who cannot participate. In this country where most jobs are created by small business, that's a very powerful incentive to do just the opposite. Because we are so overly dependent on employment-based health insurance in this country, and because we've allowed the denial of coverage to those with major maladies and pre-existing conditions, we have created an enormous chasm between haves and have-nots. One lost job paired with one serious or chronic ailment, and you are a fiscal goner. As Pam and I sat in renowned cancer centers in Indianapolis and Houston, getting pricey chemotherapy and sophisticated scans, we were grateful for the caregivers, the coverage, the clinical trials, and the chance at survival. But we also felt guilty that we were getting this because we had money, connections, and jobs. Yet all the while here in the greatest nation on earth, others facing the same predicament, citizens with the same right to life and health, were growing sick and dying with no chance whatsoever. Sadly, 5 years after Pam's death, more uninsured Americans than ever still are. My point today is simple. We need health coverage for all. We need it now. But if Congress is going to settle on an employer-based system, then our small businesses need rates and risk pools and tax policies that make the provision of health insurance competitive and affordable. We need incentives to create and sustain jobs, not incentives to lay people off, close up shop, and go to work for large organizations with benefits that we can't compete with. Thank you very much.
Thank you. Mr. Walker, your statement, please.
Good afternoon, Mr. Chairman, members. Thank you for having me. My name is Fred Walker. I'm the owner and operator of St. Petersburg Glass and Mirror in St. Petersburg, Florida. We fabricate and install flat glass and aluminum products for the construction, remodeling, and emergency recovery industries. I founded the company in 1993 with 2 credit cards and some financial support from my family and a whole lot of help from my wife. 16 years later, I feel lucky to be a survivor of the current economic disaster in our community. From day one, I felt that each employee should have an option to be included in a health insurance plan. Over the years, we learned the plans are many. You have to shop for a new one every year and in order to help in avoiding escalating costs. Pre-existing conditions are never covered, and each employee is a unique case. As the costs have risen, the financial burden that our company could bear has reduced. We currently pay 50% of our policy for each employee, and percentages charged the policies as the premiums have risen. I'm here today because the economic downturn has had an effect on my business and consequently my ability to provide health care programs for my employees. 2007 and 2008 were boom years for St. Pete Glass and Mirror. The housing boom was followed by a commercial building boom. I had 10 glazers on staff, an assistant manager, and a secretary. Every day was busy, and we sometimes had more work than we could handle. By late 2008, things started slowing down, and I saw the decline coming. I started laying off workers that September, and by February 2009, it looked like I might have to drop our health insurance program altogether. I mentioned that one day to my secretary, Mindy, and she immediately made an appointment to have a breast exam. The checkup she had been avoiding was breast cancer. I made the decision to keep our health insurance program even though the business continued to collapse. Mindy went into treatment and has fared well. However, our options are now very limited, and she has recently been refused a quote because of pre-existing conditions until she is cancer-free for 10 years. Please also note that I had a sudden bout of seizures from May of 2008 to November 2008, which included several days in the hospital, and our recent quote did not exclude me. Apparently, I'm a lower risk. We have operated since June with a staff of 4, myself and Mindy and 2 glazers. Everyone takes voluntary time off when there's no work. Gross income is roughly 1/3 of what it should be with a workforce that size. Mindy's treatment is over for now, and if she can find another option, I will go on my wife's policy soon. Rebuilding the company appears to be months or maybe years away. I thought it was my duty to ask friends, family, and mentors their opinion on this issue as I represent them as well. I've paraphrased some of their responses. Jack Grayson, owner of Seminole Realty, my cousin, had a 13-year battle with his departed wife, Peggy. She had cancer, and I quote, "The last few years, our co-pays and medication were $3,000 to $4,000 a month, and we had good insurance. What do the less fortunate people do?" Peggy passed on in 2000. Jack says we have to help those who can't afford the proper care. John Wallace, a general contractor who's my best customer, says the bill passed in the Senate last week requiring businesses to provide health insurance will crush small business. Lance's moving and company, a customer, walked in off the street last week and we were talking about it. Lance related a story that his wife had kissed their grandson on the eye when he was a baby. She had a cold sore and accidentally gave him herpes simplex in his eye. There's no medical insurance available because of the pre-existing condition. Lance has spent his life savings and is out of options. The boy's 6 years old. Most of us use chiropractors, dentists, ophthalmologists, and counselors as well as medical doctors. These people are as educated and vital to our welfare as doctors, but not covered under most medical plans. A friend related a story about a local anesthesiologist who specializes in cardio pediatric care. His clinic had liability insurance. The hospital he worked out of had liability insurance, but his annual premium for his personal liability was $250,000 per year. That's triple liability insurance, and where's our money going? Finally, my wife, Jane Walker, director of Daystar Life Center in St. Petersburg, who takes care of the least fortunate of us every day, says There are many people who choose between food, medication, and health care for their loved ones every day. Something has to be done. We live in the greatest nation in the world, have the resources. This is an issue about people, not politics, not money, but people. Finally, I did find somebody who was happy with their health care. Pete and Pat Lamb are dear family friends, and they're both over 70 years old. Their combination of Medicare and co-insurance has provided for them well. Perhaps that's the starting point. Thank you.
Thanks, Mr. Walker. Dr. Blumberg, your testimony, please.
Mr. Chairman and distinguished members of the committee, thank you for inviting me here today to share my views on the health insurance challenges facing small businesses and their workers. While I'm an employee of the Urban Institute, this testimony reflects my views alone and should not be attributed to the Urban Institute, its trustees, or its funders. Small employers are at a significant disadvantage as purchasers of health insurance relative to large employers. The consequences are clear and consistent over time. Small employers are much less likely to offer health insurance coverage to their workers, and workers in small firms are much more likely to be uninsured. The barriers that small employers face in insurance purchasing come on multiple fronts. And as premiums continue to grow faster than wages, the declines in small employer-based coverage outpace the declines among large employers. Without significant reforms to how small group health insurance markets function and to the insurance options that are available to those without employer offers of insurance coverage, there should be no expectation that these negative trends will abate. In 2008, only 36% of employers with fewer than 10 workers offered insurance to their workers, compared with 99% of employers with 1,000 or more workers. Plus, declines in employer offers over time have been greatest among small employers. The employer size differences are most dramatic when looking at employers with a low-wage workforce. Among employers for which at least half of their workers were low-wage, only 18% of the smallest employers offered health insurance coverage in 2008, compared with 98% of the largest employers. Between 2000 and 2008, the share of low-wage employers offering coverage to their workers fell almost 28% for employers with fewer than 10 workers, but held steady for the largest low-wage employers. So the differential in offer rates between small and large employers is large and growing even larger, and the situation for low-wage firms and their workers is particularly severe. Differences in employer offer rates and take-up translate directly into differences in insurance coverage for workers. Fully one-third of workers employed in firms of fewer than 25 were uninsured in 2008, compared with 13% of those employed by firms of 1,000 or more. Smaller firms face much larger administrative costs per unit of health benefit purchased. Administrative economies of scale occur because the costs of enrollment and other activities by plans are largely fixed, and insurers have fewer workers over which to spread these costs in small firms. In addition, small employers experience greater year-to-year variability in medical expenses than do large firms because there are fewer workers over which to spread the risk. Insurers charge small employers higher premiums as a result. Many states allow commercial insurers to adjust small employer premiums based on the health status and claims experience of their workers. Almost all states allow significant variations in premium rates as a function of the age of the workers, and many also allow adjustments based on the industry of the employer. These rating practices create additional difficulties for many small employers to obtain affordable coverage for their workers. Another barrier to small employers providing health insurance is that the typical worker in a small firm is paid significantly less than workers in large firms. The lower wages of small firm workers imply that they are less able to pay for health insurance through wage reductions. Consequently, their employers are less likely to offer such benefits. Workers in small firms that do not offer health insurance are often left with few options for insurance coverage. In the vast majority of states, there is no guarantee that an individual can purchase health insurance in the individual market, and even if non-group coverage is available, coverage is frequently limited, such that it may not be adequate to provide these workers with affordable access to necessary medical care. A number of provisions in H.R. 3200 would provide significant assistance for small employers and their workers. The most important of these, in my opinion, are the establishment of a national health insurance exchange, along with significant reforms to insurance market rules, and the provision of subsidies to assist the low-income population purchase health insurance coverage through the exchange. Not only would workers in small firms have a choice of insurance plan within the exchange, a situation extremely unusual today, but those that have been priced out of the market due to health issues or an older workforce may have affordable access to coverage for the first time. In addition, all small groups would see a significant decrease in the year-to-year variability of premiums due to greater sharing of health risk. In addition, small employers can expect administrative savings from purchasing coverage through the exchange. Churning across policies and insurance-related job lock should be reduced considerably. Finally, with the insurance reforms in the exchange alone, small firm workers would still be more likely to be uninsured than large firm workers because they tend to be lower income. As a consequence, the financial assistance in purchasing exchange-based coverage and the expansion of eligibility for the Medicaid program that H.R. 3200 would provide are critical elements to expanding coverage for low-wage workers and their families. In these ways, the proposed legislation would make adequate and affordable coverage available to many more workers of small employers than is the case today. Thank you very much.
Thank you, and thank you all for your testimony and for being here today. We'll start with questions. Mr. Landauer, let me ask this. You said you had a congenital heart condition. I take it you've always disclosed that to the insurance companies?
Yes.
Then why is it your rates have dramatically increased? Have you just started utilizing the service more?
No. 8 years ago, I had my third major operation that was about $500,000. It's just been basically the past 4 years they have gone up tremendously. I'm using probably $40,000 a year just in a test to make sure that they don't need to do another operation.
Okay, because I guess the part that was confusing me a little bit, your rates have gone way up, but it seemed like your surgeries were earlier, and I was trying to put some correlation there. That's what I was trying to do.
I understand that. Yes, my surgeries were, like I said, 8 years ago was
right.
my last major surgery, and yet the rates started climbing 4 years ago.
Okay. Well, Mr. Hetrick, let me ask you a question along the same lines. Long before your wife passed on, you had insurance, and then you indicated when she got sick, the year that she was really sick there, you had a 28% increase. And then when she passed on, you asked them to recalculate, then it would have been only a 10% increase. Okay. You indicated that you've had insurance all while you're in business, right?
Yep.
16 years or whatever it was?
Yes. I started the company 16 years ago. I probably got the first insurance about 14 years ago.
Okay. And then your wife became ill.
Yes.
And she's part owner of the business, so she's a covered employee.
Yes.
And then that 1 year, your rates increased 28%.
28%.
Okay. And then you said unfortunately, after your wife died, you asked them to recompute, and they said, oh, it should have been maybe a 10% increase.
Correct.
I guess I'm just thinking out loud. I would think that all those years I paid for insurance, that when I did get sick, I wouldn't see a dramatic increase because I've been paying for all those years. That's why I have insurance, so you stabilize your costs and your risk. But that does not seem to be the case. It seems like your case, your big increase, was because, unfortunately, your wife got ill.
Yeah. I mean, we have the only thing that changed, the so-called the reduced risk factor that was quoted in the email that came to us, was Pam died.
Sure.
So since her death, rates have gone back to kind of what they are for other small businesses in America. I mean, our rate increase last year was 19%.
Well, we have those insurance. We think we either build up, I don't want to say goodwill, but at least a reserve, so when we do get sick, we've been paying all these years, you think they'd pay the claim, and you said they were pretty good about paying, but then you wouldn't expect to try to pick up that loss all in the next year or two.
Yeah.
Mr. Walker, and you said you're secretary there, and I compliment you for keeping the insurance so she can at least get some coverage here. You said refuse the quote. Was that your secretary trying to buy an individual policy, or was your company refused to quote your company because she was on your policy?
It was an individual policy. salesmen will walk in off the street and want a quote.
Sure.
And, you know, I've always felt it's my duty to do the best for my employees and do the best for the company, and we'll, okay, quote us another policy. Let's see if you can beat what we got. So this happened just a couple of weeks ago after we were all involved in this, and this was an individual Humana One policy. And the guy I'd known had just started selling health insurance, and he came back and he says, well, here's a quote for you and a quote for you and a quote for you. Mindy, I'm sorry, we can't help you. So guys, let's huddle up and talk about your health insurance. So she confronted him about it, and he said that unless she's been cancer-free for 10 years, they wouldn't even give him a quote.
So if you dropped her, she'd be out of luck.
She's completely out of luck. If she loses her job, if our company continues to shrink, she's out of luck.
Okay.
She has no options.
Dr. Blumberg, and if you could show that chart number 3 up there. Each of these are small businesses. They've indicated how they've struggled to try to keep things afloat, to provide insurance, provide reasonable pay for their employees. But if you look up at this chart here I'm showing you, it's tab number 3 in that book right there. If you want to look at it, right, that book right there will be tab number 3. If Mr. Walker, you could hand that to her. What it shows is the expected loss of future small business profits due to health insurance costs over the next 10 years. This chart shows that lost profits will skyrocket 17 times that of the 2009 levels if we do not enact health reform. So I'd like to ask you about the impact of the current healthcare system on small business competitiveness. If we do not enact comprehensive reform for small group market, or I should say small group insurance market, what will the impact of health costs be on small businesses off into the future? Is that chart reflective of what's going to happen, a 17% increase?
I apologize, Mr. Chairman, because I don't...
Okay, look at tab 11. Tab 11.
Tab 11.
Yep. I misspoke. I'm sorry.
No worries. Clearly, the problem is that small businesses are already starting with one foot in the hole in terms of purchasing health insurance coverage. They simply are not efficient purchasers of coverage as a consequence of the way small insurance markets work and the marketing costs that are associated with selling coverage small group by small group, in addition to the limitations with regard to risk pooling that there are in the current voluntary small group insurance market. And so already at a disadvantage, their costs of purchasing coverage are high relative to the wages of the individuals that they're buying coverage for. And what's been going on trend-wise is that the costs of medical care grow faster than incomes, grow faster than wages. And so it really is going to become increasingly difficult over time if nothing changes those trends and nothing changes the way that these markets work for small businesses to the point where we're already seeing incredibly low rates of coverage among the smallest employers, and it'll get much worse over time until it's quite unusual for a small employer to be able to offer coverage at all.
Thank you. My time's expired. Mr. Gingrey for questions, please.
Mr. Chairman, thank you. I want to say to all the witnesses again, thank you for your testimony. Before I begin my questions, I'd like to raise 2 issues. First, the troubles of our 3 business owner panelists are unfortunately not unique. Many in this country are finding it harder and harder to afford quality health care. In fact, federal officials just yesterday announced that Medicare premiums for seniors will shoot up by over 15% to $110 a month, Part B premium. Reducing the cost of health care in this country and making sure those with chronic illnesses can access the same type of affordable insurance as Healthy America should be 2 of our main goals. Unfortunately, the rising cost of health care is a universal problem and one that we do not solve, I don't think, with H.R. 3200. Second, in hearing your testimonies today, I'd like to suggest a market reform that I've long advocated that I think would benefit both those employees with chronic illnesses as well as their healthy colleagues. High-risk pools, we've talked about this a little earlier, but high-risk pools were created to offer those with chronic illnesses a place to purchase health insurance at affordable rates, regardless of their chronic conditions. By embracing high-risk pools, in the states, and I think 28 states actually have embraced them, we have a chance to create a unique solution to a unique problem, namely how a tragic illness can disproportionately hit the health care costs of small business owners and their employees. Mr. Chairman, I raise the concern because I truly believe that H.R. 3200 does little to address either of these concerns. Everyone in this body wants to reform what ails our current system. I wish we could find a way to combine that want for change into an opportunity to sit down and find a common solution to this problem. I practiced medicine for nearly 30 years, Mr. Chairman, as you know, and I have seen firsthand how policies in Washington impact patients back home, for better or for worse. I, like many of my colleagues, just want an opportunity to share our experiences with you. And I would like to ask, Mr. Chairman, unanimous consent to submit this letter that 22 of your Democratic colleagues submitted to Speaker Pelosi back on July the 16th, 2009. I'd like to submit that for the record.
Let me just take a look at it. I don't think there'd be an objection, but
certainly, Mr. Chairman, I appreciate you looking at that. And while you're glancing at the letter, let me ask a question of Dr. Blumberg. Dr. Blumberg, as you know, H.R. 3200 contains a surtax, which would apply to any adjusted gross income exceeding $280,000 a year for an individual and $350,000 for a couple filing a joint return. The tax rates would range anywhere from 1% to 5.4% for those earning more than $1 million. According to 22 House Democrats, that's the letter that I submitted to the chairman for inclusion in the record, these taxes would fall largely on small businesses and manufacturers. They wrote in a letter to Speaker Pelosi, and I quote, that many successful small businesses, the very kind that should lead in creating jobs and help us emerge from this recession, will be taxed at over 50%. Do you agree with these House Democrats that we should not tax small businesses? And before you respond, I want to get the chairman's response to my unanimous consent request.
Could the gentleman state his unanimous consent request?
Mr. Chairman, Chairman Waxman, absolutely. The request is that we submit the letter that was written to Speaker Pelosi on July the 16th, 2009 by 22 House Democrats regarding this issue, this concern of the surtax and what adverse effect it would have on small businesses and job creation in this country.
Well, I have no objection, but again, there is no, as Ms. Blackburn had pointed out before, there is no surtax on small businesses. Surtax is on 1.2%. In fact, I think Mr. Braley's district, 99.3% of people would not see any increase. So there isn't a surtax, and we'll accept the letter and that you'd like in there on unanimous consent to accept it. And it goes on to say, these 21 members, that health care reform should be good for small businesses, and as long as small businesses are not unfairly burdened by H.R. 3200, we're confident that it can be. And I think we all agree we don't want to burden small businesses, so
well,
no
Chairman,
objection to your...
Mr. Chairman, I appreciate you accepting that for the record, and Dr. Blumberg, if you would respond.
My understanding of the bill as it stands right now is consistent with that of the chairman's, that this component, this financing component of the bill would not be a tax on small business income. It's a tax on high-earning individuals. And as such, I don't have any objections in terms of the imposition of that type of tax, but I think there's been some misunderstanding of how it would be imposed.
Well, Dr. Blumberg, thank you, and we're going to give you a copy of that letter that was submitted and included in the record for your perusal when it's a convenient time for you to do that. But, you know, I know that they're subject to interpretation, but as Ms. Blackburn pointed out, so many of these small businesses are not C Corps. They're sole proprietorships or they're S Corps, and they file as individuals, and basically, no matter what number that might be, I mean, the chairman has indicated, well, it's a very small number, but I mean, the preface of my question, and maybe I can direct it to our small business witnesses as well. If indeed, in addition to having to pay these astronomical increases in your health insurance premium year after year after year, you also had to pay at filing as an individual these high surtaxes from 1 to 5% on your income above $280,000. What adverse effect would that have on your ability to not only hire people but to continue as a growing concern? Maybe we can start with Mr. Landauer.
I'm trying to understand your point. I file an individual income tax return. I am also an S corporation, but that is completely different from my individual income tax. And I don't see how it would be affected by your saying.
Mr. Hetrick, thank you, Mr. Landauer. Mr. Hetrick, you mentioned in particular the problem that you have in regard to the way your health insurance premium, you have to pay. You don't get a tax break at all. So,
I'm also an S Corp owner, and so I have to channel all the business's income through my personal return. Part of that income is the health insurance premium because it is taxable income to anyone who owns more than 2% of an S corporation.
Mr. Walker, I'm going to yield back. The chairman's been awfully generous with his time, and we'll hopefully get a second round. I'd like to think about that and maybe answer that same question when we get back. And I yield back, Mr. Chairman. Thank you.
Chairman Waxman for questions.
Yeah, thank you, Mr. Chairman. The surtax that is in the House bill is a tax on high-income individuals. And there's a joint tax committee that said this surcharge would have no impact on 96% of small business owners. It would affect only the highest income 1.2% of taxpayers. So I think we're getting a misinterpretation of what the bill provides. But let's look at the reality. Healthcare costs are going up. They're going up overall. So how do we handle those increase in costs? If you're in a small business, the insurance companies are saying to you, if somebody in your business gets sick, we're going to control the costs by making everybody else in that business pay a higher premium. That's not controlling costs. That's shifting costs onto people who are vulnerable and have no leverage to fight back. We had a hearing last week, and there was a man by the name of Wilkes, Nathan Wilkes, and he worked for a small company. He loved that company. Then he had a son with hemophilia, which is an expensive, lifelong blood clotting disorder. So the insurance company responded by raising the cost of insurance for everyone at Mr. Wilkes' company. It's the same story we're hearing from the three of you. And Mr. Wilkes described his son's medical condition as a bomb that went off, but everybody else was collateral damage because they couldn't have insurance anymore when it became unaffordable. That's no way to hold down health care costs. That's simply shifting the costs. The shocking thing to me is that what your insurance company did to you, Mr. Landauer and Mr. Hetrick and Mr. Walker and Mr. Wilkes' situation, it's perfectly legal. It's, as far as they're concerned, the smart way to do business. But it is not acceptable in order to get people covered. Now, Mr. Gingrich said what we ought to do is have these small, we ought to have these high-risk pools. Well, as I've looked at high-risk pools around the country, it's hard to get into them. And then they put a lifetime cap. Well, sometimes these lifetime caps just keep you from ever getting the services you need. This can't be the solution, to give people a lifetime cap when they're sick. Mr. Gingrich said, well, you're going to pay a tax, which I think he was wrong in saying to those of you in small businesses, but somebody's going to pay a tax. It's going to be high-income people, but somebody will have to pay more money. If they pay more money, which means we can then bring more people into the insurance and have basically everybody covered, we're not going to require, in addition to any tax, that people pay higher extraordinarily higher insurance costs every year if somebody gets sick. That's going to be outlawed. We're not going to let the insurance companies do that any longer. Mr. Landauer, do you think that insurers should be permitted to charge higher rates to companies in which one person gets sick or has a chronic condition? It's an obvious question. Obviously not. And you know from your own experience how unacceptable it is. And Mr. Hetrick, you described your own experience with an insurance company imposing steep premium increases due to your wife's health status. I assume you think this is the wrong thing to allow to be happen, even though it's legal.
Yeah, Mr. Waxman, I'm the son of a life insurance executive, and so I understand underwriting. And if we are going to allow the underwriting based on groups of 15 people or 13 people or 3 people or whatever Mr. Landauer has, then the underwriting is going to say, gee, you need to crank up the rates. To me, the only way we can fix this is to put everyone into a large group.
Yes.
You know, from my personal perspective, I would love for the large group to be 300 million people.
Yes.
And we rate the policy that way. You folks in Congress haven't seemed to quite get to the 300 million people answer yet, which would be universal coverage and single payer.
Yes.
If we go to a public option, I guess what I'm asking you is, could we come up with a way that small businesses could group together into large risk pools so that I'm not dependent on my 13 people and he's not dependent on his 4?
Absolutely.
It's the only way to answer.
And it wouldn't be a public option. It would be pooling people together who can't get insurance because they can't afford it, can't get insurance because their employer can't afford it, can't get insurance because they have a pre-existing medical condition. All of these people would be pulled together, and they would go to an exchange, and they would be able to choose a private insurance policy, maybe another private insurance policy, maybe a third private insurance policy, and perhaps a public insurance policy. It would be their choice. But by pulling people together in this exchange, we are, in effect, pulling the risk and not putting it on a small group. And in that way, we make the system make sense. Allowing insurance companies to punish businesses because someone got sick, especially a small business, makes no sense. And people and businesses buy health insurance so they will be covered if they're sick. And small businesses shouldn't have their success shouldn't hinge upon whether an employee gets sick and be able to pay the insurance and continue in business. Thank you, Mr. Chairman.
Thank you, Mr. Waxman. Mr. Braley for questions, please.
Thank you, Mr. Chairman. I want to talk first briefly about this concept of high-risk pools, and I'm referring to a report recently called High-Risk Insurance Pools, a Flawed Model for Reform, dated September 29th of 2008. And here's the history of high-risk pools. The report notes high-risk pools have been around for over 30 years and currently exist in 35 states, but they only cover 207,000 Americans. The biggest barrier to enrollment is cost. High-risk pools are inevitably expensive because all of the enrollees have medical conditions and could potentially result in costly medical bills, which means the pools cannot spread the risk among low-risk and high-risk individuals. And the report notes specifically the state of Florida has a high-risk pool which costs $17,517 per enrollee, which is nearly 50% of the income of those enrollees. And the problem is that most of these high-risk pools are already heavily subsidized, because if you take out of your group of insureds those people who add the most cost to the pool you're insuring and put them with other people who cost a lot of money, it's going to take an extraordinary amount of money to cover their health care costs. And that's why these high-risk pools are already heavily subsidized. So you can't come in and heavily subsidize a heavily subsidized high-risk pool that makes any sense. And that's why many of these subsidies already cover about 50% of the pool, and an expansion of those programs could cost as much as $100 billion. I think the last word in this report says, in every state that covers the uninsurable with high-risk pool or offers coverage to the uninsurable, the very condition that made you uninsurable will be included as a pre-existing condition in the high-risk pool, usually for 6 to 12 months. That is a conversation stopper for most people. And if you have been diagnosed with cancer, you cannot wait 6 months to start your treatment. That's what's wrong with expansion of high-risk pools as an alternative to doing what we're trying to do, which is create reasonable competition in the marketplace, more options for consumers and small business owners. Now, Mr. Landauer, I want to make sure people understand the reality of what you just described, because insurance terminology can be very confusing. But as I understood your testimony, your firm has had to double its deductible for individual and family coverage in each of the last 2 years. Is that correct?
Yes.
And they're currently paying $8,000 for the individual policy and $16,000 for the family plan.
Yes.
So that means that before any insurance coverage kicks in for your employees, if they're under the individual policy, they have to pay $8,000 out of their pocket.
As the shop owner, I pay half of that right now.
Absolutely, and thank God for that and your generosity. My point being that until you and your employees match that deductible of $8,000 for individuals or $16,000 for family members, that company has been collecting premiums of between $400 and $800 a month and hasn't paid a dime.
Correct.
Well, Mr. Chairman, I think that is what's wrong with our health care delivery system and the way we pay for it, in that we expect so much out of hardworking Americans like Mr. Landauer, Mr. Hetrick, Mr. Walker, and millions of other small business owners who simply want to have an opportunity to provide their employees with the best coverage possible at an affordable price. And that's why the obligation on us is to find a way to give them the options they need to do that. And I think if we have the slide that's part of tab 10, can we put that up real quickly? This map shows what's wrong with the lack of competition in America right now, because it shows among the darkest blue the states where 80 to 100% of the market is dominated by 2 carriers. The light medium blue is 70 to 79% of the market dominated by 2 carriers, and the light blue 60 to 69%. When you don't have competition in the marketplace, it goes completely contrary to the economic principles that you all have to deal with every day in your businesses. And we've got a health insurance industry that is supply-driven and with limited competition, and that's the problem we need to solve. And I'll yield back the balance of my time.
Thank you, Mr. Braley. Mr. Dingle for questions, please.
To the members of the panel, my thanks and my compliments on your excellent testimony. Mr. Landauer, according to documents obtained as a part of this committee's investigation, your insurer, Wellmark, offered your business a 41% increase in premium costs this year. Is that true?
Yes, it is.
Now, how then are you going to budget or even stay afloat when you must absorb such huge unexpected increase in costs?
By raising the deductible.
You raised the deductible. So in raising the deductible, you reduced the premium.
Correct.
Had you planned for this 41% increase in premiums?
No, I have not budgeted for it.
So let's assume that your insurance costs will rise 200% in 1 year. What then would you do?
Well, right now I'm taking myself off of insurance, and I do not think it will rise. I think we will pay less next year.
So you're indicating then that your cure for this is to remove yourself from insurance coverage?
Correct.
Now, Mr. Hetrick, you discussed the importance of attracting and retaining good workers. How important is the ability of small business to offer affordable health coverage to their employees to recruitment and retention of efforts?
I think it's incredibly important. We compete every day with Eli Lilly and Company for talent in our community. And they have a remarkable benefits package. And for me to get that talent and keep them versus that big corporation, I have to have wonderful benefits. But I'll tell you, Mr. Dingell, I have had to lay off 7 people this year in order to retain the health benefits for those of us who remain. So that's 1/3 of my workforce gone, salaries gone, jobs gone, in order to continue paying 80% of the health care premium and 50% of dependent coverage. So now, it's incredibly important to us.
I would note here that our committee's investigation into small business premium situation has revealed some staggering rate increases. 6 insurers were surveyed by the committee. 2 reported annual premium increases of over 200%. 2 reported several increases of over 100%, and all reported numerous double-digit increases. Now, it is to be noted, these astronomical increases are often linked to a change in the health status of employees or other factors that you, gentlemen, as employers, cannot control, like ages of workers or the fact that many of your employees might be women. And this has led, as I've indicated, to 200% increases in some instances. I find this terrifying. Now, Mr. Landauer, again, I understand your premium is your deductible is $8,000 for an individual policy and $16,000 for a family policy. Is that right?
Correct.
Now, Mr. Landauer, you expect this to double for your plan next year? Is that correct?
If I keep everything else the same, yes.
Would you want to amplify on that last comment, please, sir?
With my medical costs this year alone, they're going to be around $40,000. It doubled last year because they were $40,000. It doubled the year before, and they were not even $40,000.
Now, this I find to be a very troublesome situation. I'd like to get beyond access to health insurance and to discuss the importance of access to care. You provide access to health insurance coverage for your employees, but I would guess that with the rising cost of the plan, largely realized through skyrocketing deductible, that access is hindered for your employees. Now, tell me, what are you going to do next year about the plan, which is, as you say, going to double?
I'm going to take myself off of the plan.
As your deductibles increase, do you hear concerns from your employees about their ability to confront and afford these rising costs that the deductible increase imposes upon them?
I hear more about the monthly cost associated with it.
Now, Dr. Blumberg, if you please, can you speak to inefficiencies in the current health insurance market and the savings that can be realized from addressing them?
Well, specifically with regard to small businesses, they are inefficient purchasers, as I mentioned earlier, of health insurance coverage as a consequence of the fact that there are very high fixed costs involved with selling insurance coverage. And so when you're taking a large amount of fixed costs and spreading it over a small number of people in a small firm, the administrative costs associated with selling that coverage are very high relative to the benefits that people are obtaining. So that's one inefficiency. Another inefficiency is that over a small risk pool, a small number of people, any individual who has extraordinarily high costs associated with their health care needs can have a very substantial impact in a particular year on the expected cost of that group. And as a consequence, we see these very big swings in premiums from year to year for small group purchasers. And obviously individuals would be willing to pay something in order to spread the costs over a period of time in order to smooth out those year-to-year variances, but insurance is not sold more than a year at a time, and so they're stuck with a small pool over which to spread their needs. So what we're hoping to achieve out of healthcare reform, another inefficiency, let me just mention, is that with these big swings of premiums, we see a lot of churning every year in insurance plans by small employers, so that they're constantly trying, when they are faced with a big increase, trying to find a better price. And as a consequence of that moving around to different plans, they are also creating higher administrative costs, which is a deadweight loss efficiency-wise. So what we're hoping with healthcare reform is to address these needs on both of those fronts, to first lower administrative costs by allowing small group purchasers to purchase coverage in the context of a national health insurance exchange. That should both lower administrative costs because some of the marketing costs, the enrollment costs associated with insurance could be done centrally, reducing those costs overall, and marketing costs in particular could be lowered that way through the exchange. In addition, by purchasing through a health insurance exchange, we would have a situation where the costs associated with each small employer could be shared in terms of risk pooling, so that the risks would be would not be felt when there is a big change in a particular year with a small number of enrollees. In addition, if you're allowed to stay within the health insurance exchange over time, even if you change jobs, and because there would be less year-to-year variability in the premiums, we would see a reduction in the churning that we see now for small businesses going from plan to plan. In addition, there are some potential inefficiencies associated with individuals picking jobs as a consequence of the health insurance choices they face. And if we eliminate the disadvantage that people face by going with a small employer as a consequence of the more limited insurance options there, then people can pick their jobs based on what the best fit is for them, best fit for their skills, instead of insurance choices, which does potentially create inefficiencies in the job market.
Doctor, my time is up. I want to thank you, and I want to thank all the panel members. And Mr. Walker, the fact I didn't ask you any questions didn't mean that I am not impressed with your testimony or not appreciated with your presence here.
Thank you, sir.
Gentlemen and ladies, thank you very much.
Chair thanks the distinguished Chairman Emeritus and recognizes the gentleman from Texas, Mr. Green, for 5 minutes.
Excuse me, John. Thank you, Mr. Chairman. And from the testimony we heard today, it's clear that skyrocketing health insurance costs are crippling small businesses. And how can we expect small businesses to compete in the market when they have to pay 18% or more per employee than larger corporations for the same health care plan? Mr. Hetrick, you stated in your written testimony that either the cost of health care coverage cuts into your profits, or if we pass it along to our customers, it renders us less competitive. In an economic downturn like the one we have experienced, have you been able to pass increased health costs on to your customers, or have the costs come out of your bottom line?
I'm sorry, I need you to repeat the question.
Particularly in tough economic times like we had, have you been able to pass any of those costs, increased health care costs, on to your customers, or does it actually go to your bottom line?
No, we have tried to keep our rates competitive with what we have in the market, so it just takes down our profitability, and quite frankly, we haven't made a profit for the last 2 years. I'm covering it out of my pocket.
So my next question is very easy. It makes it real difficult to grow if you're not showing profit for 2 years. We've heard that insurance premiums for small businesses are highly volatile, which hampers the business ability to budget. And like I said, in my own experience years ago, premium increases can vary from year to year and driven by factors that small business have no control over. Without the reform of the small business health insurance market, small small business health costs will continue to skyrocket. In the absence of meaningful reform, businesses will pay nearly $2.4 trillion in health care costs over the next 10 years, and they will lose $52.1 billion in profits, and their employees will lose $834 billion in wages. Dr. Blumberg, do you think can America's small business remain competitive if we do not reform the health insurance market?
I think there are real dangers that because I believe that the rate of small business provision of health insurance will inevitably go down over time, continuing the trends that we've seen. But it's going to be very, very difficult for the small employers to compete for labor without some alternative source of insurance coverage for their workers. Because if they're competing for labor with the same, with larger businesses who can do a better job of providing coverage, it's going to be very difficult for them.
Well, again, Mr. Chairman, I'll yield back time, but in my experience, we were a small company, and we did compete with large employers, some of them who actually were across state lines, so they were under federal law, whereas our company was typically under state law. And as a state legislator for many years, we couldn't control the cost of health care in Texas, and maybe that's why we have the highest number and the highest percentage of uninsured. We have a lot of small businesses who can't do it. And somewhere along the way, we have to provide that provide that assistance and that reform. And I think H.R. 3200 has some problems, but I think also we need to deal with the small business issue that larger companies can bargain and get lower rates where smaller businesses can, and it can't be done even with state co-ops. It has to be something on a national basis. So thank you, Mr. Chairman, for your time. And again, I appreciate our witnesses being here today.
Thank you, Mr. Green. Ms. Schakowsky for questions, please.
Thank you, Mr. Chairman, and thank you so much to our witnesses. It's almost a rule in politics that you sing the praises of small business in our country as an engine for our economy, as the biggest creator of jobs. But I think it is high time now that we make it possible for you to continue to be those things. And the testimony that you've given has been very, very dramatic. I wanted to ask you, Mr. Landauer, you said that, what are my options? You said pay for my own medical costs. I'm assuming that's what you're saying, in which case I would be forced to sell the business. Is that what you're talking about?
Correct.
You're going to sell the business?
If I have any major problems that require extra expense, my only option is to sell the business because the doctors are going to require money.
My goodness. And you said, or maybe move to Canada. We had a panel of witnesses last week that were advised to get a divorce so that the wife could go on Medicaid and be able to pay the family expenses. I mean, this is the United States of America. And to suggest things or leave options like moving to another country or getting a divorce seem totally unreasonable. I wanted to mention one other thing. We had research from the National Women's Law Center that said that insurers who practice gender rating charged 40-year-old women from 4 to 48% more than 40-year-old men. And the investigation of this committee, though, suggested that gender discrimination was even worse. It said, according to internal insurance company data uncovered in our investigation, the exact same policy for a healthy 23-year-old woman may cost 143% more than a healthy 23-year-old man. I wondered if any of you were aware of this gender discrimination in setting rates, if it ever had to become a consideration in hiring. I'd be interested to know. Mr. Walker?
I've never used that as a consideration in hiring, but certainly I've encountered it. It has to do with pregnancy. When women are in the years that they might get pregnant or have those sorts of expenses charged against the insurance company, their rates are considerably higher, sometimes as much as double.
Yeah. Mr. Hetrick?
I will share with you on the issue of gender a fairly funny story, sad story. I am now remarried. My current wife runs a national sorority. She has 47 employees at her headquarters where she is CEO. 45 of them are female. Her insurance rates are so high that she cannot even think about insuring the dependents of those employees because you're insuring 45 women, most of childbearing age. So again, it comes down to actuarial tables and underwriting. What are the expenses of women versus men? There's a difference, and they sock it to you.
Could also be who sets the rules, but that's beside the point. Mr. Landauer, have you ever encountered that or knew that about the gender discrimination?
I did not know about gender discrimination. We have had women who have been part of the company. The last woman we had was about 12 years ago, and insurance has become a tremendous mess in the past 5 years with us.
Yeah. I want to ask you, Dr. Blumberg, another shocking example of insurance company discrimination comes from the individual insurance market. In the individual market, some insurance companies consider it a pre-existing condition when a woman has had a C-section or been a victim of domestic violence, which can justify denying coverage altogether. From a policy standpoint, is there any good public policy reason why a victim of domestic abuse or a woman who delivered a baby by C-section should be shut out of the private health insurance market?
I don't think there's any good public policy rationale for it. These are all decisions that are based on expectations of future health care spending, and in a system where individuals can make decisions about going in or out of the health insurance system, where you don't have everyone in all of the time, people will have a tendency to purchase coverage when they think they're going to need care. As a consequence of this voluntary system, current regulations allow the insurers to set these rates to protect themselves against that type of adverse selection. And that is one of the main reasons why it's important under reform to have an individual requirement of health insurance coverage, because once you have that in place, once you have everyone or almost everyone in the system, you can prohibit those kinds of practices and stop people from being rated up as a consequence of future expectations.
Thank you. And I just want to thank the business owners for doing absolutely all you can to make sure that your employees have the coverage that you need. And I see at least in two instances, you know, Mr. Landauer and Mr. Hetrick have really personally suffered from the rules of the game right now. Actually, all of you have. So we'll do our best to address that. Thank you. I yield back.
Thanks. I think we've completed one round. I know Mr. Gingrey has a question or two. I probably do. If anyone else, we'll go another round with this panel as long as they have time. Before I go there, I guess I better go with Mr. Burgess first. Ready for? Okay. Mr. Gingrey, go ahead.
Mr. Chairman, thank you very much. And I did have a few things that I wanted to ask the witnesses. Obviously, what our concern here and what your concern and what you've expressed so clearly is the cost of providing health insurance to your employees in these small companies. And, you know, we're talking about in H.R. 3200 and then the two bills over on the Senate side some pretty massive changes in our health care system and health insurance delivery system, something that's going to cost at least, I think, conservatively, $1 trillion over 10 years. And the point I wanted to make and the questions I wanted to ask and see how you feel about this, certainly there are those of us on the Republican side that feel that we have some good ideas too, and that we would like to share, that we would like the majority and the president to listen to some of these suggestions. And let me ask a couple. In regard to your small businesses, And I want to ask all three of you, Mr. Walker, I'll start with you because I think that's where I ended during the first round. But the idea of maybe your glass company or Mr. Landauer's muffler shop or Mr. Hetrick's communication shop to joining together with other small companies where a pool of 1,000 or more created and that you can actually shop for affordable health care for your employees with this larger pool, lower administrative cost, spreading the risk. We refer to it sometimes as association health plans. I would like your opinion on that. As a cost saver, I would also like your opinion, Mr. Walker. You mentioned the anesthesiologist in Florida that was paying, I think, something like $275,000 a year for medical malpractice insurance. And CBO is estimated with malpractice insurance reform, tort reform, product liability reform, that we could save $54 billion over 10 years. That's a non-biased CBO estimate, and the President has said it ought to be included, and yet none of these bills, nowhere in H.R. 3200, is there anything about medical liability reform. And then lastly, I have, Chairman Waxman was concerned about cost shifting. I have a concern that H.R. 3200, it shifts costs, but it shifts them on small businesses during an economy where we need job creation. In this letter that I submitted to the record, 22 Democrats stated many small businesses, the very kind of businesses that should lead in creating jobs, would be taxed at over 50%. If this were true, would that concern any one of our three business owners? Mr. Walker, I'll start with you.
To that last question, certainly not. I've never made that kind of money, and I think the number that came out was 1% of us. As to pools, let me say this. Obviously, I'm not in the insurance business, but if you spread the risk, you're going to lower the cost to the employee. So as for a risk pool, I wouldn't say a high-risk pool, just a pool in general. Let's put some of those healthy young people behind you in the same pool with us so that we can lower the cost. Next, I have a really good example of something you're talking about. There's a duplicity in Florida. I don't know about the other states. I have to insure my employees with workers' comp insurance while they're at work. So there's two systems of health insurance. Now, a few years back, we had a couple of accidents on the job. I can't have my guys on a construction site unless we have comp. So my answer to fixing that problem was go to an employee leasing program. Employee leasing program, technically, my people don't work for me.
Mr. Walker, excuse me for interrupting you. I'm about to run out of time. If you don't mind, address the two questions about association health plans and medical liability reform, and then quickly let's go to Mr. Hetrick and Mr. Landauer.
I'd love to see liability reform. That anesthesiologist is insured 3 times. That's wrong. Secondly, what I was getting at with the workers' comp question is the spreading of the risk. That's how I was able to retain workers' comp.
Ms. Hetrick?
I'm nowhere near the income level to pay for any kind of tax. I absolutely agree that we need to have larger risk pools. The prescription that you guys come up with for that, I don't know which one is best. I don't know if it's the exchanges. I don't know if it's cooperatives. I don't know if it's a public option. I don't know if it's universal payer. I know it needs done. And I know the tax policies need change so that people who are creating jobs don't get punished for it through taxes.
Absolutely, Mr. Hetrick and Mr. Landauer, real quickly.
I agree with Mr. Hetrick on both his answers. We do need some sort of reform with the insurance, whether it be nationwide, whether it be the single payer plan, whether it groups. And am I allowed to ask a question?
Sure, go ahead. I don't know if anyone of us can answer it.
Those of you who are against a government-run plan, are you also against Medicare for the seniors? because to me that is the government-run plan. So do we do away with Medicare for the seniors?
Mr. Chairman, I'll be glad to try to take a stab at that if you'll allow. No, we're not those of us who are against throwing the baby out with the bathwater in regard to this current reform of our health care system are not opposed, not one bit, to Medicare, and many of us sitting on this panel are now eligible for Medicare, and we want it not to be weakened to pay for something else. We want it to be strengthened. We're concerned very much about the viability of Medicare, which within 7 years will be almost insolvent, and we have $35 trillion worth of unfunded liability over the next 50 years in the Medicare program. So when we see $500 billion taken out of the current Medicare system, particularly Medicare Advantage, to try to insure 15 million people, many of whom are young and healthy and don't want first dollar coverage, it just doesn't make a whole lot of sense. But thank you for your question.
Let me give you the real answer now on that one. Actually, it was an amendment in committee. No one voted to cut out Medicare. And under 3200, we expand Medicare by paying for preventive testing, mammograms, colon cancer, diabetes, things like this. Plus, we try to close the donut hole on prescription drug coverage because you have that donut hole. So I don't think anyone's against that. It's just how we're going to structure it. That's why we appreciate all of your testimony, because small business is one of them we've been struggling with. How best to do it. 3200 will, 3 bills, they'll go through changes. We'll have a final vote in the House maybe later this month or early next month. Then it's got to go Senate, and after it comes back from Senate, we have a conference after that. Hopefully by December we have a final bill. I just urge all members to take a look at reality of the bill when we get to that final point in December and cast a vote according on all these hearings we've been having. Mr. Burgess hadn't had a chance to ask questions. I'm going to go to Mr. Burgess, and I got a few questions, and then I think Mr. Braley, and then we'll wrap her up. Mr. Burgess.
Thank you, Mr. Chairman. Mr. Landauer, just to further expound on your observation, the issue before us is not, right now the federal government owns about 50% of the health care dollar that's spent in this country. And the question is not, do we roll that back, but do we move more of that dollar into the realm of the federal government? There's several of us who are concerned about that. I'm a physician by trade, ran a small business for almost 25 years in my community, so I understand a lot of the difficulties that have been discussed today. I've lived them firsthand. We had a woman testify in front of this committee, or maybe it was the health subcommittee, who was a pediatrician in Alabama. She got my attention because she's been into practice the same year I did, 1981. There is something that happens in a medical practice where you've got to pay attention to what's called the payer mix. That is, if you have patients who are covered by Medicaid and Medicare, those federal programs, as good as they are, and many people depend upon them, but as good as they are, they don't cover the cost of delivering the care in the physician's office. So the doctor is going to have to make up that cost somewhere else, and typically with as bad as the healthcare profiteers, United, Cigna, and Aetna are, they do tend to allow that practitioner to be able to cover that cost that's not paid for that's not covered by Medicare and Medicaid. Medicare is designed for doctors to go broke very slowly, but they still go broke. Medicaid doesn't have that same safety mechanism, so you go broke much more quickly. In this individual's case, she had 70% of her practice was now Medicaid in rural Alabama pediatric practice, and she said she's borrowing from her retirement fund to keep her doors open. Well, I'll tell you, having had some experience with that, and you may have encountered this yourself, if you lose money on every transaction, very difficult to make it up in volume, and that's what she found herself doing. I felt like coming across the podium and say, please stop that, because ultimately you're just going to spend down your retirement plan, and then you're still going to be in the same problem you were before. Her problem was too much of her practice was now the public option, if you will, Medicaid. So that's what worries a lot of us. Are we going to erode the ability to be able to continue for doctors around the country to keep their practices open if we go to a larger government share? There are obviously other things that are involved in that, and you've heard many of them today, but that in brief would be my answer to your question. Nobody is talking about rolling back the part of the public option, if you will, the part of the public insurance that already exists. It is what it is right now, and no one thinks that is going to be removed. I'd just like to ask, and I apologize, Mr. Chairman, for being late. I was at the National Institute of Health for most of the day. Reading through the testimony, and I apologize, Dr. Blumberg, I don't think I had yours, but just the testimony of our small business owners, it seems like there's a recurrent theme is that if pooling came up as an issue and the ability to pool your employees or your people that you're looking to insure, the concept of association health plans where you can pool not just from within your own neighborhood, but if it's a group of florists or realtors, even doctors' offices or dentists' offices, you can pool with business models even around the country to get a much larger patient pool. Very difficult to get the young folks behind us to sign up because we're talking about an insurance payment that essentially equals a bass boat, and they're healthy and the bass are biting, so I don't blame them for not wanting to buy insurance. But if you can pool and keep those costs low, that is a way to bring more people in, and I think one of you said it. You broaden the base and lower the rate. Same thing that we should be focusing on for taxes. But do any of you are you familiar with the concept of association health plans? It's something that's been talked about up here predating my arrival in Congress, but have any of you explored that as a possibility or an option? I mean, you can't do it now because we don't let you, but if we did let you, would it be an option that you would consider? And we'll just go down the table, Mr. Landauer.
Yes, that would be an option that's very much considered. My brother is an accountant in the state of Iowa, and he belongs to a state group of accountants for insurance purposes only. And that keeps his costs low on insurance. And if they can do that for the accountants in Iowa, they should be able to do it for the muffler shop owners, not only in Iowa, but nationwide. So yes, that is a very good option.
I tend to think of that as ERISA for the little guy. And if it's working well in Iowa, wouldn't it be great if he could also partner with accountants in Missouri and Oklahoma and get an even larger pool from which to then negotiate the rate with the insurance company? Mr. Hetrick, did you have a thought on that?
You know, I've talked about the risk pool here as a good idea, a bigger risk pool for businesses. It still leaves us with an employment-based healthcare system, and it doesn't help the people who lose jobs or change jobs. So it may be part of the answer. It can't be the only answer because I have laid off people this year, and the biggest concern about laying people off is that the COBRA runs out after a while, and the COBRA is incredibly expensive, and I feel incredibly guilty laying people off. But I had to lay some people off in order to keep the other people's health benefits coming.
I'm going to get cut off by the chairman here. You're correct about your observations on COBRA. My opinion is there are things that are within our purview and ability to modify that system and improve that system so it is not so injurious. But what about the effect of having an 8% payroll tax on you're looking over the horizon and hiring back employees when the business improves? If 3,200 has an 8% employee tax.
If all health care is paid out of tax dollars?
Well, if 3,200 were to pass as is today, and certainly not all health care is paid for out of tax dollars because we still leave 17 million people uninsured under 3,200.
You know, I think you're now down to the fundamental question: is health insurance a responsibility of society to the people who are members of it, and do we all have the shared obligation? If you want to talk about, you know, all the solutions that we are looking at are trying to find some subset of society to pay for another subset of society. We are asking now for businesses to pay for a large portion of society. We ask for the government to pay for some portion of society.
And we don't pay for it. We take the money from you. Yeah. We don't earn any money on our own.
Yeah. Yes, but technically
we produce nothing.
Technically,
you may not have noticed that today.
The best way to spread the risk is to put everybody in the risk pool and for everybody to share in the cost equally. And this is the situation that has been done in other countries.
As a practical matter, forgive me for interrupting, but as a practical matter, an 8% payroll tax, what does that do to you for job creation going forward? You look over the horizon, the job market or the economy is improving, you're going to bring people back into your business. But now, whether someone wants to provide insurance or not, there's an 8% payroll tax affixed to that job.
I'm sorry, I have trouble hearing.
Well, the payroll tax will be the employer mandate.
Yeah.
That everyone, of course, will contribute. So is this 8%? I mean, this is one of the largest taxes that's ever been levied upon one of the largest taxes that's ever been levied on small business. Is that going to have an effect on your ability to hire in the future?
It's still employment based.
And
you're
so,
still basing your system on people who work.
But that is the language in 3200 that we have in front of us, is that it will be paid for with an employer mandate. So people who work, you're correct, will be paying the bills. So the employers will be assessed a tax, whatever you want to call it, a premium of 8% of their payroll to cover the cost of the insurance.
If I'm paying for tax to get the health coverage or paying the insurance company to get health coverage, I want the best deal. To me, it's like getting my son's college loans. I had a choice between a private lender and a government direct lending program. And those two went into competition with each other, and it helped drive the rates down on both sides of the deal. I'd love to say the same thing on the health care. So the payment mechanism of it, whether I'm paying for a government-funded program or paying the insurance company as I am now, I want the best deal.
So you would, if the best deal were to pay the 8% payroll tax, people would you would move away from a private insurance to the government insurance. That would be a business decision that you would make. Would be to leave the private system and go to the government system.
I want to look.
And that's been one of our concerns as well, that we will drive out the private sector. And again, as my response to Mr. Landauer, if you erode the private sector, remember the private sector is paying part of the freight. It's carrying part of the load for the public sector. I am not here to apologize for insurance companies. They have brought a lot of the problems on themselves. Still, they fund the government-run insurance currently. We couldn't run our offices without that ability to pick up some from the private sector. Sorry, Mr. Chairman.
That's all right.
I knew you'd
use both rounds at once.
I knew you'd miss me all day, so I wanted to take full advantage of that.
Thank you, Mr. Burgess. I just one or two questions, wrap it up. And it's my understanding the supplemental report we wanted in earlier comes in without objections. Is that right, Mr. Gingrey?
And Mr. Chairman,
on that, excuse me, Mr. Burgess, on that specific question, while we do not object to the inclusion of this staff memo, we again caution the majority that the inclusion of specific examples in states with only a few insurance companies could make it apparent which insurance company is being discussed in each example. I do waive my reservation, Mr. Chairman. I yield back. I just want to make that point.
Sure, and on the supplemental report here dated October 20th, if there's some redactions you want, just let us know. We'll put it in there, but I don't see anything in there. But let me ask questions along those lines. And in the supplemental memo dated October 20th, we talk about group-specific factors, and Dr. Blumberg, may be appropriate to ask you. I mean, you have your baseline in healthcare, which is based on utilization and rates and that. But then you go into group factors. And for small businesses, it indicated that the group factors are health and claims experience of the group, the age of the group, the sex of the group, the size of the small business, the size number of employees, the industry. Mm-hmm. And then we go to a final part of the rate creating, which depends on administrative costs, profit that the insurance carrier expects, plus the agent's commissions, plus the taxes. So the small business or anyone buying insurance is paying about 9 different factors for small businesses. Is that same with larger businesses, or does this larger pool just sort of wipes out many of those factors?
Well, the vast majority of the very large businesses are self-insured today. So their costs are based on the risk of those that are in the firm. But because once you get to a large size, then basically the distribution of expenses within the firm looks like the distribution of expenses in the population at large. And so you don't have to worry about these things at a micro level. You're looking at the whole group. You're basing it on the law of large numbers. So, and for those medium-sized firms who are buying commercial coverage, those are experience rated as well, but they're at lower administrative costs than the small firms are. and sometimes they do face difficulties as a consequence of their risk, but they're less likely than a small firm to have those big risk swings from year to year because of their size.
Okay. And Mr. Walker, Mr. Hetrick, Mr. Landauer, it seemed like your premiums went up as your employees went down, correct?
That's correct. I'm sorry, Mr. Landau? Or me?
No, Mr. Walker, go ahead.
No, as the economy crashed,
right,
then we were caught up in the insurance's ability to climb out of the economy, and they actually raised the rates to keep themselves employed, or so it seemed to us.
I'm from Michigan. Our small businesses are looking at 22 to 40% increase just this year alone, and not necessarily because they lost employees, just the economy, and the economy's bad in Michigan, and we're just getting hit again. Mr. Landauer, do you have anything to add to that, or Mr. Hetrick? Just the number, well, I was saying, Mr. Hetrick, number of employees, seems like if you lose employees, you said you had to lay off employees. Therefore, your rates then went up because you have less of an area to spread a risk over.
How many have we cut back? Is that
no, just did you realize that as you dropped employees, you said you had to lay some off to pay for your health insurance.
Yeah.
Then your health care costs actually went up because you have less employees to spread that risk over.
Since we have fewer people on, the cost went down.
Oh, yours went
unfortunately.
down. Okay.
We also have had 2 years, 07, 08, when we had the only single-digit cost increases in our company's history. It had been double-digit every other year except those two. This year it's back to 19%.
You know, our committee now, for 2 years, we've been looking at the private insurance industry, and we've had our last 3 hearings now. It seems like the insurance companies win if you have no claims, they get their money, no claims not paying out, they make profits. People get sick, premiums go up, they make profit. You really get sick, they drop you, or else they'll purge a small business from their roles. It seems like in every scenario, the insurance industry still wins. Where's their risk? You're all talking about pooling and spreading the risk. Where's the risk for the insurance industry? I guess I don't see any. Mr. Walker?
I can tell you that I bet the three of us, we've never met each other, but I'll bet you the three of us have lost any ability to trust an insurance company because of that situation. And that's why we're probably all three in favor of at least a public option.
Dr. Blumberg, one more question, if I may. There's a lot of us talked about the insurance industry is not subject to antitrust laws. If they raise their rates 18%, 28%, 22%, really nothing you can do about it. There's been a lot of discussion about taking away the antitrust exemption. Would that create competition in the marketplace to lower some of these rates for small or large businesses?
You know, the situation is very difficult because there really is very little in terms of oversight of rating by state regulators. And the states are really where the vast majority of regulation of the insurance industry is today. And the resources there are really concentrated on ensuring that insurers are solvent and they meet the minimum solvency requirements. So there's not a lot of attention paid to how much the rates are going up and in what way they're going up for whom. And so, you know, I am not an antitrust attorney, so I'm not an expert in that area. But all I would caution is to say that that I'm not as concerned about the antitrust, you know, provisions as I am about greater oversight of the way that the insurers are operating.
Thank you. Mr. Braley, question?
Thank you, Mr. Chairman. I was a little bit surprised when Dr. Burgess went down the route of talking about this onerous 8% tax per employee on small businesses, because I was attacked at one of my town hall meetings on health care reform by a small business owner who accused me of giving incentives for businesses to dump existing health care coverage they have that's more costly than that 8% requirement in order to save costs and improve their bottom line. So let's talk a little bit about those numbers. And I'd be interested in all of your feedback on this. There are many small businesses in Iowa that employ people who make $20,000 a year or less. And when you're looking at the average annual premium for a family of 4 for small businesses at $13,000 a year, let's talk about that number. If you pay an 8% surcharge on an employee making $20,000 and they can go into the exchange and buy their own product with some supplemental affordability credits, that's going to cost a small business owner $1,600. That sounds considerably less than $13,000 a year. $40,000 a year employee, what's that going to cost you if you decide that option? $3,200. Somebody making $60,000 a year working for a small business in Iowa is doing pretty well, aren't they, Mr. Landauer? $4,800 a year. That's about a third of what it's costing right now to insure a family of 4. You can make $120,000 a year working for a small business, pay 8% into the exchange, and pay $9,600, substantially less than it costs right now to insure a family of 4. So when Congresswoman Blackburn was talking about confidence in the free market-oriented health care solutions to address these problems, count me as skeptical. There has been no institutional impediment to associated health care plans addressing the needs of small business owners in all 50 states. Have they done it? No. That's the problem that we're facing with health care. And I'd just invite each of you to respond to the problems that I've just identified. Mr. Landauer?
Would you repeat the question?
I won't go through the whole thing. Isn't it true that as a small business owner, if you are struggling to get by and these rising health care costs are tapping every dollar you have available to return a profit, that if you have an opportunity to pay substantially less by paying 8% of your employees' income into a pool and letting them choose their own health care, and if they're eligible, they qualify for affordability credits to get a health care product that may be better than what you're offering them now, how is that not a positive outcome?
Correct. That is a perfect way of doing business.
Mr. Hetrick, do you have any comments about that?
Given the choice, I would have to look at which was the better deal. If the coverage is equal, we have always erred on the side of providing quality coverage for our people.
And you made a very good point, because you're in a market where you're competing for good employees. And one of the things we know is that in a free market system, that's always going to provide incentives for employers who want to attract the best caliber of employee to offer a better benefits package to their employees.
Yes.
And that's why in the exchange that we've constructed, there's a basic plan, a premium plan, an enhanced plan, and a premium plus plan, so that employers can go in, even though they're going to have some basic required elements of coverage, and decide what makes most sense for their employees.
Absolutely. And if you've got a cheaper way for me to pay for that same thing, I'll go for the cheaper option.
Mr. Walker?
I've never been able to consider insuring a family of 4. It's always been too expensive. But I think for an individual employee, we crunched these numbers last week, and it came just below 5%. So at 8% for a family of 4, that's a much better option, no doubt.
Dr. Blumberg?
Well, our analysis has showed that there are some advantages for many small employers to being able to use the pool and opt to pay a payroll assessment in certain circumstances as opposed to the premium, and they'll obviously choose what's best for them financially. And just in case you're interested, I was not asked directly, but I have done quite a bit of analysis of association health plans and how they differ from exchanges, and they're really very different. One is oriented towards really broad pooling of health care risk, which is what you get under the exchange as laid out in HR 3200, whereas the association health plans are really oriented towards further segmentation of health care risk, allowing the healthier firms to band together to avoid sharing in the costs of the higher cost small firms.
Thank you.
Mr. Gingrey, I think you had one more question you wanted to ask.
Mr. Chairman, thank you. I want to make a couple of comments and just sort of a follow-on to what my good friend from Iowa, Mr. Braley, just said. No question about it. I think he's right. This Paying the 8% is a lot cheaper than buying and providing health insurance from the employees. And corporate America, under the provisions of H.R. 3200, will eventually, within 5 years, let's say, drop 110 million of their employees who are currently covered by corporate America, and they'll let them go right into that exchange. And if the final bill has a public option, the government, trust me, I'm from the government, I'm here to help you. Mr. Walker said the three businessmen at the table probably agree that they don't trust the insurance industry, trust the government. They'll absolutely crowd out the marketplace for the private insurers, and you'll simply have, Mr. Landauer, you definitely then will have Medicare for all, and you'll have lack of providers, and you'll have rationing of care. And that's why those of us on this side of the aisle are so concerned with the public option. It's a Trojan horse for a single-payer system, and clearly, because of this 8% deal that Mr. Braley just talked about, employers across this country will drop their coverage of their employees like a hot potato. So it's not really a question, Mr. Chairman, but I appreciate you giving me the opportunity. Mr. Hetrick, you mentioned earlier about the student loan program. And you said, hey, look, this competition between FFELP and the direct program, this is great. Let's let them compete, and let's see who offers a better rate for your child so they can go to college and get a college education. Well, the government wanted to compete, but now they have crowded out the FFELP, and it's all direct loan program as a bill that we just passed without my vote, of course, in the House of Representatives, and there will be no competition. It'll be all government. Same thing with health care. That is my concern. You can comment on that, any one of the four of you, if you'd like, if I've got time remaining, Mr. Chairman.
Dr. Blumberg.
We've looked quite a bit at the public plan option and do not believe that it is going to eradicate private health insurance coverage, even if implemented in the way laid out in the current proposal. And in fact, well over 90% of the number of Americans currently covered by private insurers, we believe would continue to would be covered by private insurers under the reform. We're talking about bringing in a lot more people into the system than are insured today. Many of them would be covered through private plans. And so because you're increasing the total number of coverage, we think roughly 92% as many people would be covered by private insurance, even in the presence of the public plan, perhaps higher than that, depending upon the rules of getting into the exchange. In addition, when you think about situations where there's been a public plan competing with private plans, I think one important example to remember is just how badly private insurers did want to compete with the Medicare program, and hence we developed the Medicare Advantage program. Now, those private insurers have actually been quite advantaged by rules under the federal government, and in fact have been doing quite well to the point where they've been providing well over extra benefits than what the Medicare beneficiaries are entitled to, and increasing costs as a consequence. So we do have examples where we have allowed this kind of competition between private plans and a public health plan, and the privates have sustained themselves and done quite well.
Very good. Well, let me thank you all for coming, and that concludes our questioning. I want to thank you for your testimony and your coming up here to testify in Washington to give us some insight. As you can see, we have differences of opinion on health care and a long way to go, but hopefully we'll get something done for the American people. Mr. Burgess? That's it. You're cut off. There's the bell. Go ahead.
I have some additional questions I'd like to submit in writing.
Yes. I was just going to give that part. The committee rules, as you know, provide that members have 10 days to submit additional questions for the record, and they'll be part of this. Tradition will be kept. You have 10 days to do so if you'd like to submit additional questions for the record. Therefore, I ask unanimous consent the contents of our document binder be entered into the record, provided that the committee staff may redact any information that is business proprietary, relates to privacy concerns, or is law enforcement sensitive. Without objection, documents will be entered into record. That concludes our hearing. This meeting of the subcommittee is adjourned.